Boeing investors, we finally have some massive fundamental news that could completely shift the momentum for BA stock. Philippine Airlines just announced a massive order split, and for the first time in nearly 2 decades, since 2007, they are buying directly from Boeing again. They're locking in 15 787-10 Dreamliners alongside 9 Airbus A350s. This is an incredibly historic win for Boeing's wide-body segment. But the real question is, does the technical chart back up this bullish news, or are we heading into a major resistance trap? Let's dive straight into the daily chart and break down exactly how you should trade this. First, let's look at the weight of this news. Philippine Airlines has traditionally been heavily reliant on Airbus over the last 20 years. Winning back a market share like this proves that despite all the negative headlines Boeing faced earlier this year, commercial airlines are still heavily reliant on the 787 platform for long-haul efficiency. This contract secures solid long-term revenue. More importantly, it brings back institutional confidence, which is exactly what a beaten-down stock like BA needs to start a fresh macro upmove. Since that peak, the stock has been in a classic cooling-off period, putting in lower highs and testing structural supports. If we look closely at the action over May, June, and early July, the bulls have successfully defended the crucial psychological support zone around $212 to $216. Notice those long lower wicks? That shows heavy institutional buying pressure keeping the stock afloat. Here is the key setup to watch. This Philippine Airlines news could act as the perfect catalyst to break above the immediate local resistance at $236. If BA can clear $236 on strong volume, the path opens up fast back to $244. And eventually a retest of the $252 to $254 highs. So what is the game plan? If you are a swing trader looking to play this news, wait for a daily candle to close above $228 to confirm that the news is driving real buying momentum. Your stop loss can be safely tucked below the recent swing low near $216, targeting $236 and $244. However, remember that Boeing is still facing broader supply chain constraints. If the market sells the news and we break below $212, this bullish thesis gets completely invalidated, and we could see a quick slide back to the major $200 psychological level. Always manage your risk first. Bottom line, this is a massive fundamental step forward for Boeing, and the chart is perfectly coiled for a breakout. But I want to know what you think. Are you buying this breakout on Boeing, or are you staying on the sidelines? Let me know your price targets in the comments below. Don't forget to smash that like button, subscribe for daily market breakdowns, and I'll see you in the next video.